Okay, now our final presenter before our next speaker here is Brad Langille, President and CEO of GoGold Resources, a Canadian-based silver and gold producer building a portfolio of low-cost, high-margin projects in Mexico. Brad.
Well, good morning, and thanks for your interest in GoGold today. Just to tell you a little bit about GoGold, I guess we're a little bit different than a lot of companies that are presenting here today. We are a Canadian company. We've focused our attentions in Mexico over the last 28 years. In Mexico, our group of companies that we've had, we have been successful in building 4 mines, and we're preparing now to build mine number 5, and in the next few years, mine number 6. So the management, these are all the companies that I've been involved in the country for the last 28 years. And we have a model here where we've dealt with a lot of the private families in Mexico, and we've acquired these assets and we've brought capital to them. We've raised about $1.5 billion of equity over the last 20 years, and we've done several $100 million of debt deals that have got these mines built. And in some cases, we've had discoveries, we've developed, and we've sold assets or we've sold companies. But GoGold has been the company now for the last 10 years that we've been focusing on. And GoGold capital structure, we're well financed. We have just under $82 million US of cash. And we also have a large receivable of VAT tax that we're getting back from the Mexican government, about $23 million. We're expecting in the next 90 days to collect about $5 million more of that. So well-financed, no debt, and a large ownership of insiders and institutional. We'd be about 50% institutionally held. And myself as CEO, I would be, as far as reporting shareholders, the second largest shareholder of the company. So the properties in GoGold and what we've been doing, GoGold is following pretty much what we've been doing all along here. For example, Santa Gratudes, we still have it listed there. That was an asset that we bought for $9 million. We invested $11 million. We sold it to Nico for $95 million. Parral is our operating asset. It's a unique project where we've been producing there now for 10 years. It's old mine waste, old tailings that we've applied some new technology to. It's an environmental cleanup that generates cash for the company and good benefit for the community. But the real driver of GoGold is our Los Ricos project. And Los Ricos project in the state of Jalisco, Mexico, is really 2 projects, our Los Ricos South and Los Ricos North. Again, what we did there in March of 2019, we arrived, through contacts that we have in Mexico, private individuals, we were able to acquire these land packages for $7.5 million US. That was in March 2019. We proceeded to do 250,000 meters of drilling. We took it from 0 resources to about 280 million ounces of silver equivalent in all categories. And that would be about 60% value in silver and about 40% value in gold. So we really are more a silver producer. So beyond outlining those resources, we have completed 2 economic studies in Los Ricos South and Los Ricos North. And we're in the process right now of advancing what's a PEA in Los Ricos South. And really it was almost at pre-feasibility level. What we were missing was our geotechnical drilling, which since has been completed by Golder. But we're now proceeding with our final feasibility that we hope to have the press release, or should have the press release out before the Denver Gold Show and Beaver Creek, so it should be out in the latter part of August. We expect that close to the PEA, as far as, the PEA at 450 million NPV. Of course, that would include inferred as well. There's not too much inferred. It's mostly all measured and indicated. So we're pretty positive on, we feel that it will still be in the 400s, but we have to finish the work, of course, for the NPV. But it's a project that generates a lot of cash. We're looking for cash generation, especially in the first 4 years of the project, in around $100 million US after-tax free cash flow. And it's a project that we see it should be 13 to 14 years. There have been some changes we've made since the PEA. There's been a lot of discussion in Mexico around open pits. And I mean, there's been an election 2 days ago. The past president, his administration was negative on open pits, not on underground mining, and this project is primarily underground. So we've adjusted, and we are adjusting our engineering in this feasibility study to make the project almost all underground. And this project is really a bulk underground mine where we have average stope widths of about 11 meters and grades of diluted grades just around 400 meters of silver equivalent. So it was always going to be first 6 years were going to be an underground project and mining to the bottom of an open pit, a large open pit as it came down. And what we've done now in the feasibility study is we will mine out all that high-grade, wide vein material in long hole mining right up to surface. And then in year 10 of the mine life, right now we'd plan a very small open pit that would take kind of the low-grade halo at surface. So that pushes out into the future, over a decade, our need for an open pit permit. So the mine is all being planned at, of course, best practices, dry stack tails, very low impact on surface, and we take those tailings, we mix them with cement, we pump them back into the mine as paste backfill. So everything's being done right. Strong relationship with the community, where in fact the community, it's an ejido, they own the surface rights, we have an agreement to build it. They are actually lobbying the government to kind of hurry up and get our permit approved. So they're very much on the side of the company. They want that mine to get going. I will say that we've applied for the permit over a year ago. We're at the final stages of an underground permit. We, in fact, did not apply for the open pit. We applied for underground. We knew that would be the much easier permit to get approved. And in all of the kind of political noise in Mexico right now, there's nobody saying that there will not be underground mines. And really, the value in this project is all, or almost all, the underground bulk mining. So as we move ahead on that, it'll be, again, about 10 years before of underground mining. And really, we see in the future, in fact, even more underground mining, because we know from history, and when we go into a project like this, the first thing we always do, we did 5 years ago before we started drilling, was we try to find all the information that exists on the project. And we were fortunate in that there was a mining operation here from 1908 to 1929, and there existed in an archive up in Missoula, Montana, in a bunch of cardboard boxes that were probably there for 80 or 90 years, hadn't been opened, but we found all the records of this old mine, monthly reports, everything they did. So we really reconstructed the mine before we started drilling it. And what we found out is that there was a real high-grade horizon in this area that they mined. It was a very successful mine. We were able to acquire this additional area, which we drilled and discovered additional ounces that had not been mined, that were in situ. And what we also found was 1927 to 1929, they had found another very high-grade area in the bottom of their mine, about 850 meters down. So in this area, we know from past sampling that we have in those archives that it's there. We didn't drill it because it'd be 850-meter holes. We're going to wait until we get underground, and we'll drill it from underground. But that's where the future exploration will be, it's a target that's high probability because we know they found it and we know they were mining it and they left because there's a revolution in 1929. So that is Los Ricos South. And kind of to sum up Los Ricos South, what we feel the feasibility study is going to show is that it's good comparables would be your kind of Silvercrest or Anaya. It's high grade, it's primarily silver, and it will generate similar cash flows. So the value equation here is, we're at a $500 million value Canadian, and if we look at companies like those and we think we're comparable, they're trading at much higher values, more in the 1.5 to 2 billion. So we have the potential of moving up in value as we advance this project towards production. We hope to have a permit by the end of the summer or the fall, and we'll be ready to break ground with our cash balances. And we do have many term sheets right now for the debt facility to complete the CapEx. The CapEx in the PEA was about $148 million. We've changed that a little bit. That was $148 million for a 1,750 ton a day mill and an expansion to 4,000 tons in year 3. And that was because we were going to do then a large open pit. So what we're doing now is we're building a 2,000 ton a day mill. A little bit more CapEx, probably the CapEx is going to be 165, 170, but no expansion in year 3, which was almost a $70 million expansion. So overall CapEx in the first 3 years would be less. And that's Los Ricos South. That's our first target. But in the district, we also have Los Ricos North, where we have a PEA. And Los Ricos North is very similar to Los Ricos South in geology, the structures. It's an early stage PEA, but what we're doing with our debt facility, obviously we're looking for the lowest cost of capital, but also flexibility, because we want to circle $10, $12 million so that as we're building Los Ricos South, as we're going into production with Los Ricos South, we want to have that infill drilling done in the north and a feasibility study completed and permit applied for, so that we can really have a pipeline here of production in the south that drives the company to be very similar to, we think, an Aya or a Silvercrest. Then we have the north, which is kind of that all over again. We're engineering that for more underground mining, and it currently in our PEA has, again, an NPV of over $400 million. So that together with the north and the south, looking out into the future, those studies would envision production of 15 to 17 million ounces of silver equivalent at all-in costs under $10. So, which comparables, a Hecla would be around that same kind of production. So we have in-house organically a pipeline over the next 5-6 years to build a primary silver producer that can be in the 15 to 17 million ounces, and studies that show that it could be under $10 all-in sustaining cost per silver equivalent ounce. So obviously lots of value to build. The next big catalysts are feasibility study in the south, a permit, we hope by end of the summer or the fall, for an underground mine. We have all the capital to break ground with a construction decision. Will be underway, 18 months to build it, and then into production with a low-cost primary silver producer that will be growing from 8 million ounces a year. And in the district, as we build it out in Los Ricos North, we anticipate something 15 to 17 million ounces at those low all-in sustaining costs. Again, we do have production today. We've been in production for 10 years at Parral with our tailings. A very good ESG project which generates money. We clean up old tailings at the same time that we generate revenue for the company and good social benefits for the community of 130,000 people in the town of Parral. So with that, we have a lot ahead of us in GoGold. a lot of catalysts, a lot of value to be built, and looking forward to the next several years at GoGold, and we'll be executing and getting it done on our mine number 5 and 6 in Mexico. Thank you.